say make money, money, make money, money, money.
Make money, money, make money, money, money. Money makes the world go round. I'm not talking around.
Welcome in to Just the Tips podcast with Gordo, Bruce, and you've got George, the host today. We've got to bring a little more energy to this intro, so I'm bringing it today, guys. How are you? Give me your best.
Oh, partner.
Yeah, Gordo.
What's up? I'm ready to go.
You're ready to go, Bruce. You gotta.
He's
you gotta
got his
bring some
ball
energy.
gag. Bruce has got his ball gag for the treatment I'm about to give him. There ain't no safety word on this show. By the way, I recently met someone.
You're already searching for your replacement.
Not exactly. I'm decided to take a little hiatus.
From women, just going to the other side.
I don't know, just crazy,
Puff Daddy
crazy
style.
women. Yeah. Anyway, I'm rapidly digressing. So, yeah, I met some. I'm sorry. The point of bringing her up though is she actually told me she got pregnant with just a tip,
Ooh, there you go.
and it was her first time having sex in her life.
Who was?
This chick I met.
That's amazing.
But yeah, I thought that was pretty. She's, the show came up, and so I charge her a royalty for mentioning it. But yeah,
Look, maybe that's a good time to put our.
More seltzer waters for this conversation.
yeah, crushing them.
Like,
That's some. Get you a seltzer. All right, all right. Let's talk some
Well,
news.
let me give an intro. Wait. You're jumping the gun here. Who's the host? You are fired up today.
A little premature.
I know.
I'm used to that.
All right, host Gordo, I'm going to mute you in a second. Put your ass in the corner.
All right.
For a timeout.
Nobody puts Gordo in the corner.
I gave my 2-year-old his first time out today, but anyways, that's besides the point. So this is Just the Tips podcast where we discuss one stock in depth every week. One of us takes the bull side. Today that's going to be Bruce, and one of us takes the bear side, which is going to be Gordo. We will discuss it and then reveal our real opinions at the end. With that, I will also put a disclaimer in. This is not investment advice. Please do not take it as such. It's just the opinions of your three podcasters here. Please consult your financial advisor, accountants, etc., before making any decisions. So with that, Gordo, we are now ready for your news blurb.
I'm gonna do a new one, I think.
A whole new song?
Well, I mean, now he's got this stupid rave thing in my head. I just like sibilance. All right, sibilance. I did it again. News.
Breaking
I don't know what
news.
the hell that was. It was like a war cry.
So, it's been a little while since we had an official podcast. We had a mini tips, kind of like Gordo over there.
Hey, watch it.
Where we talked about some of the earnings, but we haven't had a real podcast for like a month. There's actually been a lot in the AI world that's gone on in that month, and so there was the whole release of DeepSeek and the market meltdown that happened after that, and we haven't given our opinions on it. I think it's a little bit of old news, but I still think there's folks that haven't necessarily come to conclusions. There's a lot of opinions out there.
Yeah.
You saw NVDA, I think, nosedive on the day, and a lot of other related stocks. That you don't need maybe the same amount of training data. So DeepSeek did it. They claim to do it a lot cheaper. They said, what was it, like 5 to 10 million? They had trained their model.
Yeah, it was like 6 million. There's like a point number out there for a while.
Yeah,
I think, yeah. But, yeah, maybe give a little background on the whole kind of situation.
Yeah, so DeepSeek put out a model. It's a Chinese company. They put out a model that was very comparable to really what OpenAI has been able to put out. However, OpenAI has spent billions of dollars training their version of the model, on DeepSeek said they spent $5 to $6 million training, something that was very comparable, maybe even exceeded in certain areas. And so people panicked because A, like China doesn't really have access to the same chips. B, they did this without, spending a lot of money. and they got a very similar quality model. And so suddenly, if you're an investor and you're sitting there and you're saying, gee, I'm long NVIDIA on this whole thesis that people have to keep buying GPUs, by the hordes, and there's not enough of them. This company comes along and says, oh, you don't need all those GPUs. We did it with like secondhand GPUs, and, it was very cheap to do so, and we created a model that's just as good. So you can get the market reaction of why people would panic there. I guess the question is, do we, one, believe that? I think there's been some doubt cast on exactly what they did, how they did it. And do you think that panic is worried? Or, as we've watched, NVIDIA's pretty much come back now. It's pretty close to where it was, like, pre that dip. So it seems like the market is telling you, hey, it's not a big deal. We don't buy it. But I don't know. What's your guys' take?
Yeah, I think that it's pretty interesting. Like, I don't think it's the last time we'll see this type of thing happen. So they, their claim was they could do it a lot better, a lot more efficiently, and it was comparable to, I want to say OpenAI's like O3 model, which is not their latest, like most cutting edge model, but I think it's like pretty close. It might be their second latest model. I think there's a lot of like questions around how many GPUs they actually use. Like the numbers, I don't think people are really certain about whether it was like, several thousand or several tens of thousands, in which case like maybe the training costs were actually much higher. And it's, most of the information is coming out of China, so it's hard to tell, I think, exactly what level of fidelity you would have with those numbers. I do think like because the model is open source, you can kind of audit like exactly what they were doing and how they were doing it, which I think lends a lot of credibility to their case. I do think though that like, a lot of the kind of, maybe reverberation from this initial release was that part of their training was probably just distillation of OpenAI's model. So effectively like asking OpenAI's model like hundreds of thousands of questions and using the answers from those questions to basically build a generic model. They did do some like interesting things, I thought, in terms of like, if you audit the code and see exactly how they were getting such efficiencies. It's kind of weird though, like the efficiencies that they got like seem so straightforward. You would assume like, several companies would have tried it. Like they basically cut off the decimal places from like 13 to 6 or something, and they took away a bunch of like the memory needs, which is like something that like almost anyone would have probably tried. Like I'm not like deep enough in the weeds or technical enough to really understand it, but it does feel like basically after they came out with a model, most of like the heads of the largest AI model companies, large language model companies came out and gave them a lot of credit. I think the issue I think like is what happens when like an American version of DeepSeek comes out and you have like some small kind of large language model group build something like this and it doesn't have as much of the maybe noise that a DeepSeek has. Like, do you get to this plateau, I think, where you really don't need that much compute, you really don't need like that much of a brand, and the moat that like OpenAI has today really isn't as big? I think that's like a pretty existential concern in some ways, because like eventually this will continue to happen over and over. Like you'll reach some sort of plateau in terms of like the gains that you're getting in your model. And at that point, it's like, am I willing to pay OpenAI $20 a month or just use like the American DeepSeek for free effectively?
And DeepSeek was the number one like AI app, right, above OpenAI there after this, because it was so cheap, right? You didn't have to pay a whole lot to use it, and so people were very open to it.
I want to challenge this a little bit. Like I have heard some whispers that like, they really use a whole bunch of H100s and that they've really undersold how much like training they really did, and I wouldn't put it past the Chinese to do that. I mean, I don't know, but also I want to say that DeepSeek was my my OnlyFans title. And I had to shut it down because of an injury. But anyway. But I do think that it raises another more serious question. To me, it's like, where does the economic value, like if this is real, right? And like suddenly you can just create real models like way, way cheaper. Like, just play devil's advocate for a second. Doesn't it seem like really horrible It's obviously really horrible for NVIDIA. I mean, yeah, the stock went down, but
That's why
then
the market reacted the way it did, right?
yeah, but not it didn't. Yeah, it was a big move, but it could be really way worse than that if this is real. I would argue. I also argue too, like, what's the end point for AI, and like who has the margins and the value and the economic rents? Because it seems like it's you could be the companies, like enterprise. I was having an argument with somebody who said every enterprise is going to save all this money on like call center people. Well, if everyone does that, well, then they just compete those profits away, and they end up with the consumer, I guess. So then, who made money there? Just the model maker, I guess. But then you've got Llama and then DeepSeek, and so like open source and uber cheap models are available, so those guys lose value. And then it becomes, okay, well, NVIDIA, you don't need as much of them. Like, so I kind of just feel like this was like a big, I don't know who's going to be able to maintain some value. And there's various scenarios here. Like maybe it's not, maybe this DeepSeek thing is not true. They take that off the table. I think there's a bigger question about if OpenAI and Llama are the big ones, and maybe Anthropic. But like even like these industry-specific models, like there's a lot of benefit from the prior models to generate the future models, and it's just like getting to the point where we have these like all these industry verticals on the shelf at these places, and so I just don't see. I'm trying to figure out the end point. It seems everyone kind of agrees that there's going to be a massive labor hit. I mean, Dave Sachs is trying to say, "Oh, this is not. We don't know what's going to happen. Demand might really take off, and we don't know what's going to happen." This horse shit. There will be millions of jobs lost because of AI in the next 5 years, guaranteed. So knowing that, I guess the question is, where do all those savings go? Is there so much demand destroyed because so many employees are unemployed? Clearly, robots aren't coming to save, to become servants for those people or anything. I think they're going to be screwed. So I don't know. I continue to look for like what the real endpoint is, like who's going to be the winners. I don't even know if it's the OpenAIs of the world, with Llama and DeepSeek.
I think there's two big questions. So one, do you have less demand for chips, which is kind of the first question.
Yeah. I see bullshit. I'm not call bullshit on DeepSeek. Let's say this. I almost would take that off the table, but okay, continue. Sorry.
Well, I think what the arguments for why you still need a lot of GPUs, right, is you think of like AI consumption in two buckets. So you can think of it in training bucket, right, which is what most of these folks have been busy doing. And for training, it's you're pulling in data, you're creating the initial model, and then there's actually inference, which is when you're actually using the model, right? And so inference, the argument has been, and Jensen has made this argument, others have made this argument. They have a bias to make the argument, right, in their own favor. But inference is going to be even more usage, and so if you buy that second piece, like there's still a bull market here to be had on the back end of this, which is like, hey, the more cheaper you can train these models, the better you can make them. Great. We're going to be doing more and more inference. What's the law that everybody's been, Satya threw it out. A bunch of people have been talking about it. Neuron's law? I forget the guy's name.
Jevons paradox?
Oh, Jevons paradox. I'm not even in the ballpark. Jevons paradox. Thank you. I totally blanked on that. Jevons. For some reason, I thought it started with an N. It was a very unusual name. Jevons paradox, right?
Yeah.
So if you buy the inference argument, like they're not solving for inference. They've trained it cheaper, right? But inference is still going to be a huge market for this. In fact, it maybe makes the market even bigger. So I don't know. Do you buy that, Bruce? Do you buy that, Gordo?
I think on the question of like, maybe the supply chain around AI, I honestly think like this will have longer term impacts for sure. But in the short term, like the folks that are buying Blackwells and that are renting GPU space, these guys are committed for like the next 12 to 18 months. Like beyond that,
Google's spending $75 billion this year. Microsoft $80 billion.
Right.
Just go down the list. It's huge.
So I think that it could have a long-term impact. Like maybe you don't need as much data center space. Maybe you don't need as much electricity. Maybe you don't need as many GPUs. But I think like we'll only really know that in like the next several years. I think like if you think about the companies that are impacted by this today, I really doubt very much, and we'll see when NVIDIA reports this week. But maybe we've already seen it with Meta and Google and Microsoft reporting on their CapEx expenditures for this year that like it's not going to impact it really in the near term. But it could theoretically impact it in the long term. I do think that like maybe Jevons paradox is real. Like you will be making up in volume, like maybe what you're seeing trail off in in supply, and like I think that there's going to be a myriad of use cases that come out like over the next 12 to 18 months that probably, to Gordo's point, take away a bunch of jobs, but really amplify the need for inference and real-time processing. So you will have uses for that, for those GPUs. You will have uses for that data center capacity. You'll have uses for the electricity. So I think that it will be true, especially in the near term. And DeepSeek is just like a initial shot out across the bow that will impact maybe the longer-term economics of the business.
No, I do think the one other change that you will see out of DeepSeek is the closed models, right, versus open source. And so, end of the day, if you can just train off of a closed model, like what's the benefit of having a closed model? So I think you've heard Sam Altman be much more open to open source. Meta's patting themselves on the back for being open source already. But it's like, well, what's the advantage then of doing that? So I think you're going to see a lot more open source models. The question is how open. Like DeepSeek is very open. It shows you all the weights. It shows you, you can play with anything. There's different degrees of open source, but like I think a lot more of them are going to go open source after that event. Gordo, to your question of like where the value accrues, in this, do you have a view on that today? Do you think NVIDIA continues to retain? I
think that the benefits to enterprises are probably overdone. That sort of differentiated sustainable benefits from using AI will probably be elusive. Like they'll probably save some money in the short term, but like those will get, I don't know that I'll be able to pocket all those margins, right?
I think they will for some time, and they'll
for a period of time. But then, but they get peated away, or it depends on the industry and how competitive it is, I guess. But it just seems like that's just not a differentiated, sustainable competitive advantage. Like I don't see why you can earn economic return on that. Just having the off-the-shelf customer, service, model, customer service representative, like AI bot, whatever, that's really effective. Okay, we all do it, awesome. But I just don't see why that wouldn't just eventually pass right on to the customer. And yeah, I don't know. I feel like, probably, I just think DeepSeek's a little bit of bullshit, but it also scares me because it's just like, okay, I thought there'd be one thing that somebody couldn't just, China's taken everything and find a way to backwards engineer it. What a shock. But to do it with AI is kind of a kick in the sack. They're like, I didn't think they could do that, and I kind of still want to believe that they can't, So it's a pretty different world. If this is really real, I mean, obviously, was it 20% that NVIDIA got hit? I mean, that's probably at least what it should be if it's real. Well, if it's real, it should be 50%. But yeah, I don't know. I just feel like
back to where it was before. I don't think the market. I think the market's digested and it's saying, hey, there's nothing to see here. They buy the argument of inference, and we're going to keep needing GPUs. So.
Yeah, it's hard to believe they just end run everything and they just beat NVIDIA and all these guys at the highest end where they're most performant, and there's this backdoor. I think it probably at least tells you that the trailing edge of AI technology is going to be gone quickly. Like, you're not going to be able to harvest like old models forever, because they're going to backwards engineer them and be out there competing really fast. And so you're going to have to be one of the leaders that's innovating constantly on the edge, or there's going to be rapid sort of backwards engineering of stuff potentially. Definitely reduces the size of the prize for probably the OpenAIs and the Anthropics of the world. But it does seem like those people are going to be, I still feel like NVIDIA, Anthropic, OpenAI, and even Meta, are going to be the winners of AI. That's not fundamentally changed, but yeah, the pie got smaller, it seems like.
Well, we do have to move on, but Bruce, do you buy that? Closing us out here, do you buy that OpenAI and all the model companies are more commoditized now?
I think they are. They will be maybe in the longer term, like once the gains start slowing down. I think like in the near term though, like especially OpenAI, but I think OpenAI has captured like the consumer zeitgeist. Like everybody uses it, and a lot of people are using it for every single search, like instead of Google. And I think that that's something that's really hard to replicate. Like you have to do it organically, and that's a big part of their value today, like their enterprise value today. Like, does that get commoditized over time? Maybe. Like, do I want to pay $20 a month to do this? Not really, but will I? Because, it's the best solution that's out there? Probably. So I think over time, like it will end up changing. But for right now, like their moat's pretty good. Like it's pretty, pretty strong. Like I think they'll continue to build like a user base that's very, very compelling and like almost like hard to duplicate or replicate. And then over time, if they can't get as many gains as they've had historically, like people will start to use something else and just not pay for it. They might even use.
Should I sell my Google stock per your search comment?
Let me tell you, like I work with a lot of folks that are in their 20s, and they are all exclusively using ChatGPT. I don't know if you should sell it or not, but I think like the Google search moat is like rapidly eroding.
Yeah, I've felt that, right? And that's the vast majority of that profit engine. So if you don't believe in that, get out. All right. Let's move on to the main event then. Let's get ready to rumble. In this corner, we've got Bruce, who's weighing in at 195 pounds. He's got biceps the size of bowling balls. Woo! Though his sweatshirt's hiding.
195, that would be pretty good. I mean, I'm tipping, I think, at like 162, but.
Are you serious?
Soaking wet, holding a chicken wing.
Yeah.
That's just because you're so shredded. Anyways, Bruce is the bull today, so he's going to introduce us to. I hate to say we're covering meme stocks these days, but we're going to cover I think one of the more compelling names related to the AI space, which is Palantir. So, Bruce, why don't you bring us in, and then Gordo's going to give us the bear case after.
Palan-tears fasciitis. That's a backup title. That's not even my real title. It's penis tier. I got lots of them. Here we go.
Okay. So my title kind of
letting you share today, huh? Look at that.
I know. I figured it out.
I think I changed the setting. I changed the setting for him.
I think until like Gordo stops paying our bills again, then at least
Hey, man, it's tough out there.
To be fair, we haven't paid Gordo either. So.
That's true. He's truly our benefactor. Okay, I have like by far the shittiest title like of all time, and I did get this from ChatGPT, so that might explain it. I didn't use.
Oh, that's fucking bad.
I know.
You should have used DeepSeek.
I know it's bad. So anyway, the title's "Have No Fear." It's Palantir.
You're better than this.
It's
you
trash.
spent no time on this.
And you've got the lasers on your.
Well, the presentation format itself is exceptional. It's just the title. So.
That's pretty much the entire. That's like 50% of the rating of your pitch is the title. So fuck that up.
Okay, so I was going to go through and just explain a little bit about what Palantir does, and then I'll give you guys the bull case, and yeah, we can take it from there. So what does Palantir do? I listed sort of the product overview, and it's like basically there's 4 different parts to what they do, but maybe instead of like going through each and every part of what they do, I can give a more kind of maybe complete description just by talking about what their product does as a whole. And then the secret sauce, I think, is not only the product, but the go-to-market, which I think is very unique and something that really hasn't been done as effectively or as at scale in the same way that Palantir has been able to do it.
Isn't the secret sauce just being a meme stock? Like basically they've won the hearts and minds of the Reddit community?
We will get there. I think the meme stock part does certainly play a role, I think, in maybe the valuation. I'm sure Gordo will argue that. But look, you can make money in the meme stocks as long as you're not the last one holding the bag kind of thing. And I think like as opposed to other meme stocks, so like GameStop, for example, Palantir, I think, does have real value. Like, it does have real intrinsic value. It does have real enterprise value. It does have a real product. It's kind of been purpose-built for the time that we're in right now, even though, the company...
The time of Doge?
The time of Doge, we'll talk about that as well. But I think even more so just like, if you think about what AI should and can do for enterprises of all sizes, it's really hard to take that notion and apply it effectively without using something like Palantir, which is why they've been so successful. And maybe that goes to what they actually do, which is, they take a lot of the data. At the end of the day, it's a data platform in some ways that allows you to take a lot of your data at the enterprise level, visualize it, integrate it together, manage it in a way that allows you to get real business insights. I think the main difference between what Palantir does and what, maybe other large data type platforms or data focused platforms do is it goes the final step of like completing the circle from just like taking data that can exist across any organization. So people often talk about systems of record, or these large systems like Salesforce, for example, which have been around for decades, and people have put, decades worth of information and gigabytes and petabytes into these systems, and they live in these systems, but it's very hard to extract them out of these systems because those companies want to create a really sticky product, and so they make it hard to get it out. But also that prevents a lot of companies from using that data with other systems of record. And so I think while to date, like most SaaS products, and if you think about like the Snowflakes or the Databricks of the world have created these platforms, or even going back to like the Informatica's, they've created products across this kind of data value chain that allow you to do certain things with your data. Oftentimes they stop short of really tying everything together. So tying all of these disparate data sources together in a way that makes it like that makes the business logic, really interesting for enterprise users. And so what I think Palantir has done effectively is really take a lot of that data in whatever system it lives in and allow for companies to utilize that data in ways that, that make business logic sense, right? And so you can do everything from optimize your supply chain to figure out what the toxicity levels of a mining operation look like. And you can really utilize a dynamic data set that obviously changes in real time to inform your view. And that's, I think, really sort of encapsulates what Palantir does. They combine data science, integration, AI applications. There's a big defense contracting component that they've kind of started getting a lot of success around. And then they have a very consultative model. The word that a lot of people use with regards to Palantir is, and I think they use themselves, is ontology. So they're able to kind of break a lot of these silos and deliver these custom solutions that enable knowledge workers really to take advantage of all the data that lives across their organization. And like, there's so many different things to consider when you talk about data, whether it's like access management, whether it's finding the right data sources, whether it's cleaning the right data sources, whether it's putting it in the right format. And I think Palantir does a really good job, probably maybe the best job in the enterprise market today, of doing all of the heavy lifting for customers and just giving them, a tool that allows them to see what the outputs could be. And so that's maybe at a product level, what Palantir does. That's sort of half. That's only half of the equation, I would say. The other part of the equation is really their go-to-market strategy. So, if you like reading kind of between the lines of what a company like this does, you have to believe there's probably a high level of customization, just because like every enterprise is like a massively different snowflake than every other enterprise, even in the same industries. They're all using
customization never scales. So how
That's
do
right. Yeah. And so customization historically has been a big strike or two strikes against most companies, because you're effectively using people for customization as opposed to using software. And people generally carry, best case sort of 30% type gross margin profiles. They're very expensive. They're hard to scale. You can't effectively, build the same type of model with a people business as you can with a software business. And ultimately, your blended gross margins typically look a lot worse than they would for a software business. So if you have $1,
like Accenture versus a Google or whatever, right?
That's right. Yeah. So that's a good example. So like, an Accenture or a Deloitte or a KPG or, even
IBM.
In IBM, even a management consulting company looks a lot different than a pure software company, and it typically, historically, hasn't been.
Infosys.
Infosys might be a little different just because it's the Indian BPO outsourcer, but same idea. I think
the right multiple. I think Palantir. Okay.
Yeah, I think that the thing that Palantir has done differently, though, is they have used these services employees as forward deployed engineers that go into these enterprises, and they're building the customized solution that they can leverage with other companies, but that those enterprises can also leverage themselves. And those engineers and that model isn't a 30% model. That model often looks a lot like a true software type model, in the sense that the blended gross margins for Palantir are in the like high 70s, 80%, right? And so,
Yeah, which is comparable to most SaaS companies.
Which is comparable to most SaaS companies. The other piece of that, though, is that their ASPs are much, much higher than most traditional SaaS companies. I think their average ASP for their top 20 customers is something like $60 million a year. So they're making up for in size what they're lacking in volume. And if you don't look at the fact that they have any services, you just look at the operating profile of the company itself, it looks like a software company. And so it's one of those things, I think, where they took a business model that has historically had a lot of noise and baggage around it, and made it look like a true software business, both in terms of the scale as well as in terms of like the actual profile itself. And so that's something that I think a lot more companies will use and deploy, I think, more aggressively, just because I think what's happened in this kind of first maybe 1.5 wave of AI is enterprises kind of across the board have looked at their knowledge workers and told them to do AI, like whatever, that kind of means. And so in order to do AI, you really need someone to come in and tie all of your systems together in a way that makes it consumable and that gives you insights that you weren't able to have before. So if you're using Salesforce or you're using, any kind of system of record, most of them have AI built into them today, but these are, AI resources that are very specific to their own platform. They're not tying together.
So if you're Salesforce, you're looking at sales data only. You're not tying the ERP and the financials.
Right.
You're not tying all these other systems.
Right. And a lot of times these companies have custom built software as well. They have their own tooling that they've built over several decades. And so it just doesn't tie everything together in a way that gives you like actionable insights in the way that Palantir is able to do it. And they're able to use modern AI technology, modern large language technology to enable this next generation of services and next generation of insights. And I think that's the piece that really differentiates them from most software companies.
Can I ask a question? They were born. So my Palantir story was I was making a transition from the finance world into technology, and I was told I asked this VC who I was interviewing for a job and rejected me, and he's like, you should go get a job at a company that's just up and coming. And I was like, all right, what company would you point me to? And he said Palantir, and I interviewed there, and they rejected me too.
It's like high school and college for me, man. Welcome to the club.
Yeah.
We're actually interviewing right now, turns out.
Rejection is the status quo in most interviews, but like 2013. But like, so this company has been around for a while. It was pre LLM AI, and most companies that are pre LLM AI have not necessarily made that transition smoothly. So would you say like they've done a better job at it? Is there risk there because they weren't born in that era? Like they're dependent on things that maybe aren't modern? Like what's your take on, how that transition has gone?
I think that Palantir was sort of born maybe too early for them to really take advantage of where the market was going to go. And they've sort of just been beneficiaries because they've built this model that works really, really well with artificial intelligence in the enterprise. And so I think I'll show you actually in my first kind of point here that really, they built a very nice business over time, particularly on the back of working with, the U.S. government and other governments. But it really has started to accelerate, and it's really been turbocharged by kind of the modern era of AI, particularly in the enterprise, the U.S. and maybe the broader kind of Western commercial segment. That's where I think they're seeing a lot of the growth because that's where the market is going today. Like outside of this, I would say outside of this market that we're seeing today in LLMs, in AI, in the enterprise, you would have probably expected, kind of a traditional growth profile for the company. So their revenue is at scale. It's like, call it $3.5 billion. And you would have expected that to continue to grow, but it wouldn't have inflected. Like they would have been growing slightly slower every year, but their base would have been bigger. And so it would have been kind of the traditional growth trajectory that we would expect for most enterprise companies. I think if I can get to it, what we've seen with Palantir is a real inflection in growth. And I think it's one of those things where in order to believe, and we'll get to this, and I'm sure Gordo will cover this maybe at length.
You're trying to defuse the grenade. It's still coming.
maybe at
You
length.
can't change how absurd the valuation is by trying to allude to it and neg on it.
But you do have to believe, like I think, to invest in Palantir really at this level, that it is a generational company. They do have kind of, I would say, the hallmarks of a company that is doing something that most companies do not do at scale, which is grow faster in this year and potentially next year and maybe the year after that, which I think you also have to believe, faster than they were growing last year and the year before that, which is something that you almost never see. We've talked about this before on other podcasts, and so for those of you that can't see it, and I can barely see it myself,
Good editing.
The company grew about 17% in 2023, and it's going to grow 27% in 2024, which is a massive spike in growth, right? And it really speaks, I think, to where the market is today. And the projection for 2025, at least according to one kind of Wall Street research firm, is that it'll grow even faster in 2025. So it's one of those things, I think, where the company is seeing real strength in its core markets in a way that we almost never see, really, especially at scale. And so part of it is, I think that's where the market is, but part of it is like they've built an execution machine, right? Like their operating profile looks like a SaaS company, and they have a bunch of, for lack of a better term, services employees. The other thing I note is the ASPs for the customers here, and I mentioned like the top 20 are at 60 million. For all of their customers, their ASPs, their average selling price is around 2.5 million, and it's barely off of sort of their last quarter. So it's one of those things, I think, where the average amount that a company is willing to spend for Palantir suggests that the value that they're getting from the company is like significantly higher than most enterprise software companies that we've seen today. And I think they've built this machine over the last decade plus in a way that kind of differentiates what they're offering. And I think that their platform will get stronger just based on the fact that they have access to more data points over the past decade than most other folks do. And they've built an operational machine that can go to market pretty effectively across the enterprise.
On that ASP.
Yep.
I mean, for one, I think, I'll make 2 points here. But like one, 2.5 million per commercial customer. Like, I mean, most, I think, software vendors that I come across, like I'm happy when they're in like 6 figures, let alone 7 figures. So 2.5 million is huge. However, like looking at the rate of this chart is it's declining, right? Like it keeps going down. So like, is that a concern? Because you started in Q1 of 21 at 8.9 million per customer, and now you're down at 2.5, and it looks like every quarter it keeps going down. So like they maybe started with the biggest fish, and now they're like having to fish in smaller and smaller ponds. And so does that create a growth headwind in the future? Or does that continue to go down?
I think it's more of like a commentary around the types of companies that they're going after these days, and less a commentary on the market. Like from what I've read, at least, like they're by far the most expensive solution in the market, and there's very few competitors. But folks are willing to pay that because I think the solution provides more value than anything else. I think it's something that you would watch, right, as a investor, to see like if this growth trajectory really starts to inflect downward in a meaningful way, like suggesting that there's better competition in the market or that their pricing power has gone away. I think it's just one of those things, though. Like this is almost call it an order of magnitude higher than what you see on the SaaS side.
Yeah.
To the point where like you have a lot of wiggle room on the ASP before I think you would really start to worry.
Yeah, I mean, it does seem like that decline is slowing versus what it had been, but yeah, it is something to definitely watch.
Yeah, definitely. And so the second point I would say is the company does have, real political tailwinds, I think. And so as I think about like the investing horizon here, it's, a couple years out, I would say. And, the company was founded several years ago by Alex Karp, Joe Lonsdale, who I'm showing on this slide, and a couple other folks that are escaping my mind. But
I was hoping, because you have it next to the Doge sign, I was hoping that was like a picture of Big Balls. You've heard of Big Balls, right?
I vaguely have. I am losing like that's the guy who works at Fired and who's going to get rehired. It's not a picture of Big Balls, but I do think look, I think that this administration is probably more linked, to certain individuals than maybe any other administration ever has been, for better or worse. Like, not a political podcast, but I do think like there's certainly, have been tailwinds for the folks that have been associated with this administration, and I think Palan-tears is very closely associated in some ways, especially through Joe Lonsdale with the Trump administration, and I think that will be.
He's kissed the ring a few times.
I'm not commenting on any sort of affiliation.
He's licked it up and down, is what you're saying?
There or anywhere else, but I do think it will be a net positive for the business itself. Like, I think it gives them a free shot over the next 4 years to really ramp aggressively. I think that what Doge is doing and the connectivity between Elon Musk, Doge, the Trump administration, and Palantir will certainly be a tailwind as well as they think about like how to make the government more efficient. I think you can use a lot of the maybe AI tooling that Palantir has created on the commercial side, on the digital first side, on the open architecture side to make, the government far more efficient. So that means, bigger contracts, I think, more stickier revenue for Palantir. And generally, as I think about the next couple of years, like what is the risk reward on the administration versus the company? I think it's got to be a net positive almost across the board. So I think that's something, we've rarely talked about with regards to any other company, and probably something that most people, don't consider as much, just given how removed most enterprise software companies are from any administration. But this is, I think, the one case where a big portion of Palantir's revenue comes from the government.
What portion is that? That's what I don't know. I always hear it's like closely tied to the government revenue, but like what portion of the revenue comes from the government?
I had that number and now I lost it. But I'll come back to it. It's substantial.
I mean, the one other company we talked about, I'll give you some air cover here while you look. The one other company we talked about being very politically sensitive at the time was when we covered Meta, right, Gordo? Like we were talking about them. And, you've seen what Mark Zuckerberg has done. He's done a 180, right? He's like a Democrat by nature, ran a very liberal company. He's like totally kissed the ring. He's thrown DEI out. He's, he's donated to Trump's inauguration fund. He showed up there and sat next to all his billionaire friends or enemies in terms of Elon Musk, right? So he's kissed the ring, like he's gone that direction. So like that is the one other company that's gone that, and they pivoted because they saw how valuable it was.
Yeah,
right, in the good graces.
I think it's more valuable for this administration than it has been historically, and my research suggests that it's about a third of their revenue comes from the government.
Okay, I would have thought it was higher, actually. By the way, like all the commentary I constantly hear on this company being tied to the government.
Yeah. So nonetheless, like I think that this is a massive tailwind for the company. I think it will continue to generate a lot of value.
Is there growth? Like when you think about their growth, do we have any view on like how much of that is tied to the government versus
30%? Yeah. I think around 30% of their growth is tied to.
Okay, so it's like in line with revenue. It's not above. It's not out of line with the revenue. Okay.
Yep. Okay. And so those are the first kind of two items, and then obviously the elephant in the room here is valuation. And
I see.
Let me get regressive. Yeah, I saw that 1.8 EV to revs to growth.
there really isn't.
Why not 2 times?
There isn't.
1.8 is just the right number, huh?
Another way to describe it, other than the valuation is spicy as fuck. This is a company that is very much in the universe of meme stocks. It's probably traded, way ahead of where their fundamentals are in almost every regard, like by almost every metric. I think like if you are going to value this on a metric, in some reasonable framework, you would have to think about it as like EV to revenue to growth, which is I think at around 1.8, 1.9 times, still very high.
I was going to say 1.9. I think they came down or went up a little bit recently, but yes.
It's very, very high. Doesn't like tip the scales into crazy land, but gets pretty close. So it is one of those companies, I think, where like this is a bet you would need to be taking over a very long-term horizon, just like in kind of set it and forget it and say there's going to be a couple of big winners here in the world of AI. There's going to be a couple of $1 trillion companies that are built on AI in the enterprise. Palantir could be one of them. Like I think if anything, the growth potentially could be understated if they continue to take market share and continue to build. I think maybe the most flexible platform in the enterprise for AI. But it is one of those companies where, the valuation is certainly like, pretty meaningfully ahead, I would say, of like what you would consider kind of a traditional sort of enterprise metric. So this is more kind of a macro bet, I would say, than anything else. But it is something that any investor here would definitely have to consider stomaching over a longer term hold period.
Yeah, I mean, I'm sure Gordo will cover, but I think on most traditional metrics, it is the most expensive stock in the market.
I mean, that was amazingly not valued by traditional. That was a really good bankery. We got to use Fairy Dust and Bones on Rocks, and like, we just got to fucking just do lines of cocaine to come up with a valuation.
Well, I will. I'll as the neutral host here, who's probably butting in too much. I will say like on a rule of 40, right? Like I like to do rule of 40, like 2x growth, because historically like growth is more heavily weighted than profitability, right? Like they have one of the highest metrics you'll see, right? So they have a combination of growth and profitability that most don't have. So like if you take that, I think you're above 70%. So it's almost double the rule of 40, right? 40 is supposed to be an excellent company, and they're 72% on that metric. So that is something.
They should get 2x the revenue multiple, maybe.
Perhaps.
Yeah, it's a tough one. It's a tough one to slice on the valuation side, but yeah, I mean, I think I think that's generally the bull case. Like, I think it is a pretty interesting company to cover, but you do need to have some heavy duty stomach to really to buy in.
How much is the revenue of this company right now?
What is the revenue?
Yeah, does anybody know?
It's basic. It's like 3 point.
It's almost 3.8.
3.8.
Next 12 months is supposed to be
3.8 billion.
3.8.
Yeah, that's amazing. And the enterprise value is like 260 billion.
I think it's like 240 billion. But yeah.
Yeah. All right. So begrudge me that 20 billion with a rounding error in this company's valuation. It is amazing. Okay. So are you ready to give me the conch? Are you done?
Yep.
Oh, all right. The title is It's Gonna End in Palan-tears.
Tears, Tears.
Yeah.
And I love that you've kept this to one slide.
Yeah. I'm giving the people
This
what
is
they
a new
want.
record.
It might be half a slide. I can't see it, but
The bear case. All right. So we've always keep saying that we do one slide. I don't think you need to say very much. First thing is, actually, yeah, so I had 230 billion enterprise value. On the right, I just took their free cash flow and grew it. And by the way, the growth rate's been decelerating massively as they've turned profitable on free cash flow. I said, let's just grow this an absurd amount. Let's grow it at 33% a year, just like this last year for like 4 years. And I did this for 20 years before it gets to like 2% growth. And I have it grow at 2% in perpetuity and use a 10% discount rate, which I think is generous for this company. I'm sure their cost of capital is greater than 10. I do all of that. I get 83 billion. Like, you have to believe that this friggin' thing is just like going to grow to the sky. I mean, I guess with like, I mean, you can just have to squint. I mean, they're doing 3 billion in revenue right now and amazing amount of free cash flow, or I guess 4 billion in revenue roughly versus, you know, like, I guess that's an annual free cash flow of 1.5 billion. So, you know, really strong free cash flow margins. So you can kind of imagine them. Can you imagine them doing 60 billion in revenue? Revenue in 2044? I don't know, maybe. But yeah, you have to believe that these guys are going to inflect or never slow down. It just seems, you know, quite a stretch. I'd also kind of add, like, I don't know if you really alluded to this. I mean, so much of their business is really like kind of, you know, 3-letter agency, like top secret. I think that's kind of the views that these guys are, you know, the government doesn't kind of like multi-source some of these things. They're so sensitive and some of the things they do are so advanced. I think that kind of is part of the meme stock sort of mystique is that, you know, you're just kind of like, how can you really criticize something that you don't really know what exactly they're doing in every case? And it's just very hard to do channel checks on. And so, you know, I mean, I think that there's that also speaks to why they have such great margins and why their business is so amazing. But it's also like, I kind of feel like the intrigue probably helps the stock. Like, people can't be as critical about something they don't know about, and also just, I think, gives people the perhaps correct impression that they have almost impossible moat to penetrate. But it just gives me caution. Like I just say, you know, like, I don't trust things where you just, I mean, this is definitely not a Warren Buffett. I don't know what Warren Buffett's view on this is. Maybe you guys do, but I kind of think that he just likes the stuff that he can understand, and this is a business where it's like, you by definition can't understand a lot of what they're doing because it's secret. It's also highly technical. I mean, the commercial business, I mean, I'm talking shit about this here in problem 3, but, you know, like, it's kind of, it's not, I agree with 31%, like, in the revenue for the whole commercial business, not just U.S. commercial like they talked about, in aggregate, you know, is kind of decelerating. And obviously so is the, you know, the government, or I say U.S. commercial has also been decelerating. Government's been accelerating off of you know, you can see all the lines there, and it's kind of growing around 33%, whereas before it was growing in the 10% to 15% range for over 23 in the first half of 24, or the first quarter of 24. So, you know, there's some different puts and takes here, but, you know, this commercial business, it seems like that's a risk, and, you know, given that's decelerating, you know, this thing's supposed to grow to the sky, so that's just kind of a lead weight. I just, if you step back, I mean, you kind of, I think I could take the opposite case. I mean, I think everyone sort of assumes, and what's priced in is that Palantir is just going to be a massive share gainer, you know, like sort of the Doge, you know, kind of, you know, industrial complex, like Elon's in there, like Palantir is just going to get, I assume that Palantir CEO, I don't know how they are, if you guys know anything about Elon and his relationship, you know, but just seems like there's going to be a lot of scrutiny on budgets. There's going to be a lot of disruption. There's going to be a lot of just Trump chaos. Like, I just don't know that it's all great for them, like being so government exposed. I would also add too, like we alluded to this, like they have these like forward deployed engineers and everything they do. That's sort of a natural. I mean, yeah, they've achieved a lot of growth, but at some point, like, you know, how many bodies can you find? I mean, I think the counter to that, I guess, just to pre-counter, you know, is I think that they're saying AI is going to like replace some of those guys, I guess, and they're going to get more efficient. But just makes me nervous. Like, grow to the sky with like where you definitely have some bodies required to do it. Like, that's just not like software or internet where you can just, there's no friction. If you start having to deal with the physics of the real world, like, you know, but employing people, like, I just don't see how they can kind of grow at that, you know, at the speed that people want them to, or as the valuation implies. But so, you know, again, super expensive. I just would say, you know, high level, valuation's absurd. You can't, you know, there's nobody, you know, I think would naturally acquire them. So you can't even use really the greater fool theory. You know, you're playing for $1 trillion valuation. People are talking about that. It's just insane. You know, for a business with $4 billion in revenue, to be talking about that at this point, and again, not a lot of transparency. You know, you just got various things that I think could be sort of limiters or headwinds to their growth, which has to be just executed perfectly before you could ever justify this valuation. So, mic drop.
I just wanted to correct one thing I said. I said it was a third of the government was a third of the revenue. It's actually 56% of the revenue. I misspoke, and 78% of that is from U.S. government agencies. So it is a even more maybe meaningful part of their overall revenue mix.
And it's growing slower than their revenue mix. So even though it's 58%. Well, I guess it's growing on par with their projected.
Yeah.
All right.
I mean, look, aside from the valuation, I think like it's hard to justify the valuation. Like, I mean, the opaque business model. I think especially on the commercial side, it's not super opaque. Like their business is to help enterprises become more efficient, get better insights, and they're working directly with kind of the engineering teams at those enterprises. Like, I'm not sure if that's necessarily a feature or a bug or neither. It feels like almost maybe in some ways like a more of a traditional enterprise software model. In terms of the slowing commercial business, I think the commercial business is actually starting to pick up some steam. Especially if you think about the growth profile of the overall company, it's starting to really inflect. I think it's like, as I think about it, it's like a question of like how quickly and fast and far does this company inflect? Like it's hard to argue that they're not inflecting when growth this year is going to be stronger than it was last year, like at meaningful scale. But it's like, does that mean it gets to 10 billion or 20 billion, which I think is like what would justify a $200 billion type number? Or does it kind of, start to plateau at 6 and 7 and 7.5 kind of thing? I think like cash flows won't, like, even though I think some of the Wall Street analysts suggest that as a metric, I don't think it will actually, be used as a metric for most of the retail or maybe even the institutional audience here for several years. Like, I think everything will be tied to the ability of the company to grow fast. And so if they can continue to do that, I think they will, maybe trade sideways at this valuation and maybe even go higher. But I think cash flows are kind of a interesting byproduct for high growth companies, especially this type of high growth company, but not necessarily like the metric of note.
How do I mean, this is an interesting thing. How do you think about the federal government? So you said the federal government is like 78% of their
56.
government business, which is 58% of their business. So let's say 45% of their business is one single customer, which is the federal government, which is a unique customer.
Yeah,
like historically,
but it's not just one. It's not just one. Like, the federal government is giving us money. It's like dozens of agencies. It's like multiple different buyers. It's contracts that have been awarded in multiple different years for very long periods of time. Like, it's a very complex.
Yeah, but
ecosystem.
Historically, like, you have customer concentration like that, not even close to 45%, right? Like, people discount those types of businesses. And to your point, yeah, so maybe there's some different buyers within that government. It's not fair to lump them together. But
I don't know. I don't know if you necessarily have to discount it. Like, especially, I know like some people do discount the government in the traditional SaaS world, but the government is like one of the largest buyers pre-Doge, and they're one of the stickiest buyers. They're one of the stickiest buyers, and I think like a lot of the interesting, cybersecurity, enterprise software, data type companies, like even the large cloud companies, are fighting for massive contracts from the government. Those are some of the biggest contracts that ever get awarded. And like, even if you extend it to other companies like defense contracting companies, like all of their revenue comes from the government, and these still can be tens, hundreds of billions of dollars of enterprise value. So I don't know. I mean, like, I hear like the bears on the argument, but I just, at the end of the day, like, I feel like 80% gross margin revenue is 80% gross margin revenue, or no matter where it comes from. And like, if the government is taking like a cost plus model here and they're giving you 50% gross margin revenue, and that's half your revenue, then it does maybe deserve some sort of discount. But if it all looks the same, I don't know. I'm not necessarily swayed by it, and I certainly wouldn't necessarily like award it a multiple compression, I guess. Although 100
I'm,
times.
I'm laughing at Gordo here eating worms or something over there. I'm not sure what he's stuffing his mouth full of. I mean,
His
last
mom's
question.
spaghetti. Like Eminem.
Mom's spaghetti. There you go. All right, Eminem. Maybe last question before I ask your true opinions. I mean, so this week the stock was down 15% roughly, on the note that the U.S. government is looking for efficiencies in spending on defense, and so I think that's the buckets where a lot of Palan-tears spend comes in. So again, does that give you pause from that largest customer who's now said, "Hey, we're on the hunt to become like." We don't want to run the deficits that we've run. We've spent a ton on defense. We're going to get rid of all these wars. We're no longer supporting Ukraine. We're going to cut back on spending, so we don't need to spend in the same way. So your largest customer who's been inflecting up is now telling you they're going to spend less.
I think they're going to spend less, but I don't know if that means like
It's just socialist,
the
liberal.
argument is that they'll basically use platforms like Palantir to get more efficient.
Yeah, like I said, they're going to gain this price is in. They're going to gain a shit ton of share and replace all those sort of dead weight libs that Biden put in or whatever, like the Doge
you have to
guys
believe,
with their
right?
stickle,
Yeah, the bodies
right?
are getting rid of are going to be replaced by more
These
efficient
civil
software.
servant pieces of parasites. All that money is going to be good for Palantir, right? That's going to free up money for Palantir.
I mean, the thing about
that, honestly.
Palantir
I
is
kind of
like
believe that.
they are literally one phone call away from the guy who's making these decisions, and like that's a phone call they've made, I'm sure, hundreds of times, and like there are very few.
Who shall not be named? Is it? Which one are you talking about? Are you talking about Elon? Or are you talking about Trump?
Is there a difference?
Oh, yeah.
President Trump. I mean,
Well,
President Elon.
look,
Sorry,
I
that's what
think.
meant to say.
I mean, look, I think it's hard to tell if it's a headwind or a tailwind, honestly, at this point. But like, I think they're well positioned to take advantage of the situation in ways that other companies aren't. So,
Well, the market thought it was a tailwind, sent the stock down 15%. I think almost 20% on the day that it was announced. It came back a little bit. But all right, let's move to what is your real opinion? So, Bruce, I feel like in real life you're a little more valuation sensitive. I don't think you're really a bull here. That's my guess. But share your real opinion.
Bruce, so look, I think this is a great company. Honestly, I think they've built something that's pretty unique in the market in a way that a lot of other companies should look at very closely, especially in the enterprise space. I think like services have been a dirty word for a long time, but they've made it look a lot cleaner than it has been historically, like in a pretty unique way. And I think it's like pretty compelling, makes it really sticky. They can leave their product in for a couple months and be like, hey, if you don't want to use it, turn it off, and no one turns it off. Like, I think it's a pretty powerful platform. Hard to wrap your head around the valuation. Like, it's one of those companies, like it's trading at the top of every range by like a lot. And it would be one of those companies, like if I was to invest, it would just be like I'm going to set it and forget it for like 10 years and hope that eventually I come out on top. What's our call? We have to be a bull or a bear, or how does it? What's the?
Yes, you have
Ideally, you're a bull or bear.
You cannot be non-binary, like you know. I mean, like you can at work
All right,
or
Trump.
whatever. It's fine. There's nothing wrong with it. I'm just saying.
I think in the short term, I'm a bear on valuation. On valuation alone, yeah.
Yeah.
It's just impossible. It's just impossible. Like, I mean, I kind of feel like I say this every time. This is the absolute peak of it looks expensive, but it keeps going up kind of thing. Like, what's it up like 200% in 6 months? I mean, this thing just keeps going up. And so I'm kind of like, as the fucking Mo in me is like, I can't, this is the classic thing I should buy because I don't want to. Because every time I don't buy these things, it goes to $500 billion before it goes back to $100 trillion. Like Supermicro too, like right after we talked about it, went up a bunch before it got annihilated. So it's impossible to pick those moments. I mean, this is a way better quality company, and it's way more sustainable, and there's way much. You can convince yourself.
So
this could be.
Let's put a time frame out there. Let's say 1 year and 5 years.
Ooh.
What's your view? And Bruce, feel free to jump in with your 1 year, 5 year.
Or 1 year bear, 5 year bull.
I think I'm in the same boat. Same boat. because I just feel like right now the valuation is just so friggin' full, and the headwinds that could come and uncertainty around the government and spending. And yeah, it's tough. Which means it's probably going to double before our next pod. You know.
I mean, I think it is hard. It's a meme stock, so like it doesn't trade necessarily on just purely.
Have you guys seen this like Reddit stuff where people say, "Oh, they basically talk about them like Visa, right? Like, oh, they're like black ops and like they can just charge whatever they want because they're the only supplier." And it's not entirely good analogous because the government budget, the government has more power than consumers, but it still just seems.
But eventually, I've got to think, and I'll show my side here. Like, you have these kind of margins, like in this kind of growth, more competition is going to come eventually. Like, especially like people are going to come in.
Can they though? Because it's like you have to be.
You think they can defend this? So in your chart right here, 20 years out, trying to justify this valuation, like can they defend it that long? It's
really high switching costs for government, right? And really high barriers to entry because you've got to get qualified and then
there is, but government
technology rise, huge running start.
How big is the government TAM? Like how much does the government ultimately spend with these guys? Because like the other ones are slowing down. So, like, end of the day, can the government itself carry this company? I'm not convinced of it. So, like, personally, I'd short it, but like, it's a meme stock. I would not really short it in real life because you never know how high it can go. That's not trading on fundamentals. But long term,
it's the
like,
word
give me
kind of
5
short,
years,
though, right? It's a fundamental short on a quality company with no catalyst. It's just you can't do it.
Yeah, you wouldn't do it, but
it's not a piece of shit company. I mean, that might be worth doing it.
The minute the growth shows another like slowdown, right? Like you're not accelerating. Like it's hard to justify this valuation. I think it goes away. So personally, wouldn't buy it. I'd stay short in both time periods. It's just too high. I go back to like app loving, right? Like which we covered recently. Like I'd rather own app loving. It's in the same. It's the next like.
Did you say app loving?
You said loving.
No G.
Jesus, you said app loving. You really said that. We're leaving that in.
That is
not just the tip.
First Gordo uses the Spanish pronunciation for llama, also known as llama. Now you say
did I do
that?
Isn't it always llama? Don't you people say llama?
Yes.
Do they? You white-ish people. Silly white people.
Yes. This is the whitest man ever.
Dude, I've been, for a white guy, I've got a lot of, anyway. 4 of them that are not. So I think I have, if you add them all together, it's like almost 2 minority children. Okay.
Anyways, we got to cut it off. But to my point, I will wrap on like app loving is, has an enterprise value. It's 144 EV. It's growing faster. It's better on a rule of 40. It's cheaper. Like even the EV to revs to growth that like Bruce talked about, it's at 1.08. So it's almost half, and you get a super quality company. Like I would much rather own
a super quality company with no moat. But yeah,
whatever. No one else can do what they do. What are you talking about?
Okay.
No customer concentration.
I'm shorting super micro.
All right. Anyways, with that, let's wrap it, boys. Bulls make money.
Bears make money.
Pigs get
slaughtered.
Oink, oink. We out.
Peace.
Say make money, money, make money, money, money.
Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound. I need that Skrilla on the Rilla.